Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Thursday edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, the earnings parade continues. We've got Cisco, TripAdvisor, NetApp, GoDaddy, ABX, Wendy's, Waste Management, MGM. That's just like half or less than half of the stocks to report earnings yesterday after the bell and this morning. So we'll try to cover as many of those as we can. Our guest today at 8:35 is Tracy Ryniec. She is a stock strategist at Zacks Investment Research. Joel, how are we doing in the S&Ps on this lovely Thursday morning?
Oh, we're getting killed again, Spencer. We're trading down almost 5 handles. Couldn't challenge or couldn't take out the high from yesterday in the pre-market session. So 2150, 150. We'll be keeping an eye on that level. That's the all-time high. Coming back on the downside. A lot of air here in this market. Just call the hat like 2140 or 2340 here. Support. And moving on to the crude oil market. Boy, crude has been quiet lately. We have that trading just flat here on the session, still dealing with the major resistance at the $54 level. And gold and silver, they're trading up here a little bit. Nothing to make a big deal out of. Dennis, how you doing here on this Thursday morning?
Just chilling. Like you said, major sell-off here this morning, Joe, when you get the market falling a few points. It just seems like every time it falls a few points, though, we're going to end up 100 Dow points by the end of the day, aren't we?
Have we hit any circuit breakers?
Isn't it every single day that we open a little bit flat or down, and by the end of the day, we end up being up 10, 15 handles? Yeah. How many days in a row have we done that? Bring it up. Bring it up. It's a trend. I'm telling you, it's a trend.
I don't know how many, because we had some up opens, but what I will tell you from an S&P standard is that going back here on the 9th, we made a new all-time high and a new all-time closing high. So that's 1, 2, 3, 4, 5 days in a row. I've never seen it before. This has to be the top, Dennis.
So 5 days in a row of what?
New all-time highs and new all-time closing highs.
But it's new all-time highs by like 10 handles, too,
Exactly.
Isn't it?
Yeah. Yep.
Like, it's not even like we squeaked one out. Like, we've been straight up here.
Right. The first day we did it, we took it out by 9 points. The second day we did it, we took it out by 8 points. The next day we did it, we took it out by 15 points. 2 days ago, we took it out by 9 handles. And then yesterday, we took it out by 14 handles. And you know what? Also, I'm going to maybe try and get Sean Udall on. Remember when he said 2350, Dennis? He's been preaching that for about a year and a half.
Yeah.
We've hit 2350. I wonder if he's going to bump his targets up. Since I've known him, he's been talking about 2350 in the S&Ps.
We are there, and the bull market is in full force. And if you look and you just run and scan, stocks across the board really, are participating now. Like, it's hard to find. Even yesterday, the drug stocks were flying, the financials were flying. It's just, a lot of different sectors participating here now. People are just looking for stuff to buy. It's kind of panic mode if you're underweight, I'll tell you that. So you got to think about it as a portfolio manager perspective and think about, maybe you were nervous, some uncertainty here lately, at the beginning of the year, maybe even with Trump, some uncertainty. And now we just keep blasting off every day. And you're like, oh, man, I'm underweight here. I need to buy stocks. Every time we pull back 4 or 5, 10 handles, if we didn't get 10 handles, it seems like we're going to get 5 handle pullback. There's just portfolio managers. So like we say, Joel, underneath demand in the S&P. And it's going to take a major crisis probably to really, take that underneath demand away.
Yeah, I mean, if you look at it from the post or the election low, man, we've only rallied, 325 handles since we got down. Yeah, yep, because we got down overnight to, what was that, 20 and a quarter that night, and then now
we were down 100 points that night. That was 105 points because that was limit down, so we were down 105.
And here we are.
And so from that low, on the election night, that being down 105, we're up 350 handles.
Exactly.
Pretty impressive move here. And that's the overall market. You talk like the financials and stuff, they're up 30, 40%, some of these bank stocks. And let's quickly just talk about a couple of these bank stocks here before we jump into the earnings parade. Bank America breaking out yesterday once again. And you know what's working right now? Breakouts. Breakouts are working. You talked about this a couple, the setups that we've had in the past, but they really do appear to be working here now. Breakouts, Joel, are back in favor. They weren't working for a while, but they sure are now.
Actually, Bank America broke out 2 days ago when it finally cleared the 2350 level, and it's not even giving you a second chance to look at that old resistance. Going back to 2008, 2009 levels for Bank America. But hey, if maybe the party's just getting started here in Bank America. Look at this. If you look at the monthly chart, the stock had an all-time high back this was late or mid 2006, over $55. So if you look at it from this perspective, it's just getting going. If you look at the daily, it looks like it's overdone. But sometimes you got to use different time frames to get different ideas in the market.
Let's just jump back over to the earnings parade. And we got Cisco numbers last night, Spencer. And again, the pullback in Cisco was bought. It dipped right after the report, and then it's trading up here now. What did Cisco have to say?
Well, their Q2 adjusted EPS 57 cents versus 56 cents, so they beat by a penny. Sales 11.6 billion versus 11.55 billion, so they beat slightly there as well. You see Q3 adjusted EPS at 57 to 59 cents. That's in line with the estimate, and sales down 2% to unchanged on a year-over-year basis. They're also raising their quarterly dividend from 26 cents a share to 29 cents a share.
Like we were saying, the thing pulled back on the initial report, Joel, but the buy the dippers are even there after hours, and they were all over Cisco. And here it is just a few minutes later, and it's trading in the green last night.
Pretty nice volume, too, 33.58. That's your pre-market high. Currently not far off that level. If you're looking for continued follow-through, you want it through that area. Boy, going back on the monthlies here, man, I was going to have to go back a long time here on the monthlies. Now, once again, here's a chart, $35 maybe. I see some highs just under 35. That was back once again in the middle of 2007. So look for those monthly highs here. Let me see if I can get my other chart out to see where they are. 4 or 5 monthly highs right at this area, 33.5, 34. So we'll keep an eye on that.
Also had earnings from Applied Materials last night, AMAT. Spencer, what Applied have to say? Of course, it's trading higher.
They reported Q1 adjusted EPS of 67 to 66 cents, so again beat by a penny. Net sales 3.278 billion versus 3.27 billion, so okay. Q2 adjusted EPS, they see that at 72 cents to 80 cents versus a 63 cent estimate, so looking good. Sales of 3.45 billion versus to 3.6 billion. That's the range. 3.26 was the estimate, so they beat on both their Q2 guidance numbers.
And Applied Materials is now trading up above 50 cents. Big hole number trading at 36. You always look at those big hole numbers, and you wonder if there wasn't an institution with some size there before, because you had multiple highs at 35.85. So let's see what this thing does at 36. It has traded above it after hours last night. It did trade above it in the pre-market here too, but it's a big bogey, $36.
Pre-market high, man, that was a big spike, a big bar. We went from just under or at $35 up to $36.75. I think I'll just go with Dennis's whole number there at 36 on the daily charts. You did have 2 highs right there at 583 and 585. So big number, battleground. Could be the high or the low of the day here in AMAT.
TripAdvisor, TRIP, also reporting earnings, and TripAdvisor is trading. That's trading down. So you actually find one that is trading down here in the pre-market, Joel. It's down $3. Spencer, what did Trip have to say?
Well, they blew it yesterday. Q4 EPS 16 cents versus 31 cents.
Ooh.
Revenue is 316 million versus 326 million. So they missed bad.
TripAdvisor down 3 points. Joel, what's the numbers? The levels have to say.
47 even. That's your pre-market low, but now comfortably hanging out at 49.50. Man, this is a tough one, Dennis, because you had a big run up here, so you got a big open area here. Wow, $46. Let's just call there's a pair of lows at 46. We haven't quite got there yet, but I don't know. That we bounced so hard off that pre-market low here, I think you're going to see some buyers on any kind of decline here in TripAdvisor.
And then looking over at GoDaddy. I always like the commercials and I always like the website. And I do use GoDaddy if I'm buying URLs, so that shows you marketing works. GoDaddy, GDDY, is trading down though in the pre-market. It's down $2. Had a nice run up ahead of the earnings report yesterday. Now trading down in the pre-market.
Q4 GAAP EPS 2-cent loss versus a 9-cent gain. Estimate sales 485.9 million versus 485.58. So they beat slightly there. They see Q4 revs at $485 to $490 million. That's a little bit lower than the estimate, but that was 493 or just under 494 actually. And they see their fiscal year 17 revenue at $2.18 to $2.22 billion. That's higher than the 1.85 estimate.
GDDY, Joel, give us a level. Find something.
35.28 is where it's trading here. Boom. I don't know, man. This could be a tough one because you're not getting any kind of a bounce, really. It's just sitting here. I think I would hold out for the lower or the upper 34s here if I had a nice short position. I see two lows at 34.67 and 34.70. So let's see if we can get under the whole number of 35 and what we can do with that double bottom there.
Jumping over here to NetApp, NTAP. Talk about the earnings from NetApp.
Give me 1 second. I was talking to my computer. All right. NetApp, they reported Q3 adjusted EPS of 82 cents versus 74 cents. Sales 1.4 billion versus 1.39. So they beat on both. They see their fiscal year 17 adjusted EPS at 79 to 84 cents. That's a little bit higher than the estimate. And sales of 1.36 to 1.51 billion dollars. That's in line with the estimate. So pretty good.
NTAP is in the pre-market trading up over $3. This is a breakout here again for NTAP, and we're looking at a 52-week high here, not a multi-year high, because this thing got back up actually 2011 to over $60. But it is breaking out through that critical $40 resistance level. I think the old 40 becomes new support if this thing pulls back. Joel, what do you think?
Pre-market high, we did get up to 42.79. I look at the monthly charts here to get some kind of criteria here to look at. And back in November and December of 2014, you struggled at the 43.60, 43.70 area. So if you want to hold out for a nice juicy target there, that would be one area of potential resistance. Of course, we have really backed off the pre-market high, 42.81. So we'll see if someone maybe lines up at 42, 42 and a half, but longer-term resistance up at 43.70.
This morning we had MGM report earnings, and it was trading up last night against that big resistance of $30, and now they pulled the rug out from underneath that.
Ooh.
Earnings report, MGM.
Q4 EPS of 4 cents versus a $1.38 loss in the same quarter last year. So pretty good year over year. Sales 2.46 billion. That's in line. They also initiated a dividend that was this morning of 11 cents per share is the new dividend.
Oh, so they didn't have a dividend before, so they gave them a little bit, but they're still finding a reason to sell this one here. They're hitting MGM. It was 30 was major resistance. I mean, we were up there last night. I honestly thought about shorting this into the report just because that $30 level was so big, and I was like, here it is. It was trading up 30 cents last night ahead of the report. People getting excited because it seems like everything wants to try to go higher. And, it's giving you an opportunity. And obviously, if you would have shorted it going into the report, you'd be pretty happy right now, trading down almost 2 points from where it was trading last night.
Yeah, C30 held up there, and then, boom, someone came in, decided to sell on weakness instead of strength. Pre-market low, we just hit 28.05. I'm going to go to the dailies here to give you a level to look at. Just under $28 here. I see a little low at 27.86. Another low at just under that, or right there too, 27.77. So just under 28. That could be some potential support here in MGM.
Other casino stocks, I always like to look at Sympathy. Wynn is trading down just slightly here in the pre-market here, and Las Vegas Sands trading slightly down here as well. So not a lot of sympathy. And we've been saying this for a while. The sympathy moves don't really seem to be happening as much as they have in the past. So you got to keep that in mind with your trading. You got to look at these different trends. Like even looking at this one here. Here's a sympathy play that always seems to work very well, but hasn't really been moving here even this morning. Avis Budget Group. So we'll get the numbers from Spencer, and then I'll talk about the sympathy play. So CAR reports last night. Spencer, the details?
They report Q4 adjusted EPS of 15 cents versus 17 cents. Sales 1.9 billion versus 1.96. So they missed a little bit on both there. As far as guidance goes, they see their fiscal year 17 adjusted EPS. That's in line, a pretty big range of $3.05 to $3.75, but it's in line with the estimate that was $3.47. Sales 8.8 to 8.95 billion dollars. That's a slight miss. 9.01 was the estimate there. So okay on the earnings and okay on the guidance, but nothing that blows me away.
So CAR getting the beats here last night and in the pre-markets, trading down to the tune of 8%. And you think, okay, well, naturally, Hertz is going to be getting hit. Here's Hertz. It's only trading down 17 cents, HT Zebra. And that's just showing you that sympathy is not working as well as it has in the past. Like, actually, right on the report, they hit this thing all the way down to 22 bucks Hertz. And CAR has fallen a lot farther, but Hertz has come back here. So you got to, identify those trends. And the trend right now is, okay, you get maybe a little small sympathy move, but you're not getting this big sympathy move. Like when sympathy is really working, sometimes, you'll see a stock like Hertz fall 3 or 4% when, CAR is down 8%. But we're seeing, a trade only down 0.75%. And actually, there's fairly large bids here at 22.15, 22.25, which is telling you this thing might not even, open down very much at all. So sympathy just not working that well here, and that's been for the last few months.
All right. Well, first, let's just take a look at CAR here, trading down in the pre-market. Trading at the low of the session, 37.36. Maybe hold out for the lower 36 handle. You got a low there at 36.39 as a potential area. If that doesn't hold under 36, you got a double bottom at the 35.55, or just call it 35.50 area. But Dennis, here's the reason why they're not hitting the Hertz. And I haven't been able to figure this stock out. They've done some reorganization, but look what happened to this thing. They reorganized here not too long ago. When was this? It was up at a huge level where it was at 41.53 on December 7th. That was some reorg thing. So this has had a unintended 2-for-1 stock split here. So, I mean, this thing has just been killed for quite a while. So that's why, I don't think, you're going to see the same kind of follow through. And I'm not sure, Spencer, and maybe we'll have to ask Brent about this. They spun some stuff off. They took their stock up. I totally don't understand what they did, but they got their stock up and then it went right back down.
Stock's just trading at 22.25 here now, so it is down about 1%. But just what I've been noting is the sympathy moves, even with the MGM Las Vegas Sands, they're barely trading down. So sympathy just has been working. Spinner's agreeing with me too in the chat. He's saying usually when Apple has earnings, the suppliers work though, and I think they did work to a certain extent. But you just got to be aware. Sometimes sympathy is a good trade, and right now it's just not working as much as it normally does. We also had in the chat, we had a couple people asking us about GNC. This is your disaster stock of the day. It's your disaster stock of just call it disaster stock, period. The stock just continues to fall. It seems like 20% every month. Anyways, it's down 20% today. I'm assuming disappointing earnings here from GNC. The stock was $22 back in October. It's $6 here now. I mean, I think the writing's on the wall here. If you can't buy stuff like drugs on Amazon, I don't know. So this is a stock that I think is in a world of trouble.
I'm trying to find the day that, was it last month or the month before that where they shut down every store? They had like a company-wide shutdown day. Anyway, Q4 EPS.
Just to save money.
Yeah, Q4 EPS.
We do it every quarter. We shut down one day.
All right, Q4 EPS 7 cents versus 36 cents. Revenues of 569.93 million. Versus 571. That may not compare, but the EPS, 7 cents versus 36 cents. They're also suspending their dividend. And D Reporter reported back in December that they're being circled by a few private equity firms. I don't doubt that for a second.
the dividend was 12%. When you see a dividend at 12%, that's a red flag all over the place, because if that dividend was safe, people would be scooping that company up. Dividend's gone now, so now it's zero. I mean, we've seen this happen before. This thing's in a world of hurt. It's hard to come out here and now short. I hate shorting stocks when they're like $6, $7, $5, because they get a little bit of a decent rumor or something, and they can pop 20 or 30% in a hurry. I got hurt on Sears Holdings, remember, just a few days ago, and that's kind of going right back to my list. When the stocks are $5, $6, shorting them is a little bit more difficult to do, just because they are prone to short squeezes. They are prone to popping up. I mean, the stock was $22 back in October, but when the dust settles here at GNC, I don't know if there's much there. So especially now that they're cutting the dividend and stuff, so am I coming in here and throwing this in my investment portfolio? Hell no. I think the business model is broken.
And, boy, I'll just give you the pre-market low there. Pre-market low is 626 here. Big volume trading as well. I would say if you're short, just put some bids out there. See if you get hit, so you see if there be constant sellers out there. If you're
let's stop you for a second. What if you are short? What if you've been short this thing for the last 2 months? It's at 15. Now it's at 6. You obviously only have $6 left on the table, so maybe you want to book some profits. But let's say you just want to run with it. What's a strategy you can
How
do
many
to protect
shares?
yourself here?
How many shares am I short?
Well, it doesn't. It's all relative how many shares you're short.
I mean, if I'm
let's just say hypothetically you're short 1,000 shares. So you're short 1,000 shares from $10. It's at 665 here, and now it's down 20%. Like me and you, we got the scalper blood, so we're probably just bringing it in. But let's say you want to run it. You think this thing might be a potential dollar or $2 or zero even. How do you set yourself up to protect yourself? Do you buy some calls against your short position? Some upside calls to protect yourself, or do you just put some trailing buy stops in there? How would you protect yourself, Joe?
Well, there's a couple different things. What was your risk when you shorted it at 10? Was it $2? Was that your risk?
You got to analyze always your risk return.
Right.
For sure.
So that if you were short and you were risking $2, then $6 is $4. That's a 2-to-1 risk reward ratio. You got to go with it.
Yeah.
If you were risking up to 15, then you got to wait for this thing to go down to pennies, or get under $1. So it all depends what your risk reward ratio is. You could also do absolutely nothing and say, I'm not going to be able to pick the bottom in this, and you can move your stop down accordingly from 12 down to 10. If I had a large position in this, I'd get a feeler. Let's say if I'm short 10,000, man, I wouldn't hesitate to cover 1,000 or two today, or maybe even more of the position.
Be nice to take the money, your initial investment in the short side off the table. Like you're short from 10 to 6. If you had 1,000 shares, you cover 600 of it. You're pretty much playing with the house's money, right?
Yeah.
If you get it in at 6. So there is different ways to play it. But I've always been one. I've traded for 17 years, and I'm very good. And I'll pat myself on the back. I'm very good at entering positions, and identifying good opportunities. My exits suck. I've always been very bad at exiting. I always exit way too soon. I always, it's a scalper blood in me. I joke about on the show, but a lot of times, I'll make a decent amount of money, and then I leave like 2/3 of it on the table. And and I've read stuff, and you try to understand, but the psychology of just being in there, it's difficult. That's why in my investment portfolio, I try not to touch it. I try not to look at it. I know you do the same thing, Joe, because I don't want to trade it. So usually when I stick something in my investment portfolio, it's for a long, long time. Although I don't invest on the short side. Maybe I should start investing on the short side on companies like GNC back 3 months ago. But it's difficult as a trader. Your natural tendency is to trade out of things, and if you could just hold a little bit longer, sometimes there's more money on the table. Now I don't know, GNC is a good example of this, because this stock has been straight down here, like I said, from 22 to 6 in the last 3 months. So if you're probably not bringing it in today, you're probably getting a little bit greedy. If you've been shorted for those 3 months,
how much
if
cash?
You've been short for a couple of days.
How much cash?
What's that?
How much cash do they have?
You look at the cash component. I don't know. We can go analyze that, but that could take a while. But
okay,
I think they're cutting the dividend, slash the dividend down. The company's in a world of hurt, so I don't think this thing's bounced back to $10 anytime soon.
I agree. I'd move your stop, take some profits. I wouldn't it all depends on your risk reward and the size of your position.
It's probably one of the hardest things. Ace even says his exits need work. I mean, it's one of the hardest things how to correctly exit your trade. It's not one thing when you got a target and you set it up. I'm gonna do a 3-to-1. And I got the target and everything. But sometimes it's just the stock's moving in your favor and it's like boom, it's there. Sometimes it'd be better instead of just taking it off, just take a piece off, or to use some trailing stops to protect your gains. And sometimes I don't like using the physical stop because I feel like you throw that out in the market. Sometimes the stops get run. Stop hunters out there. Sometimes stock goes right down to that point and then bounces off and just stops you out at the very low. So but just an idea that if you take some of the profits, maybe you can hold the rest of it a little bit better. You used to say something to me, when you had like a 1,000 or 2,000 share position, you always made the most on the last 500 because you'd be out of
Didn't worry
1,000,
about it.
a little
Yep.
more comfortable. Another 500. Now you got the last 500 you're just kind of comfortable with because you're playing with the house's money to a certain extent, and that's where you make the big bucks. And I think it's a good point you made.
Okay. All right. And we had something else in the chat pop up, too. What, SCON, was that the stock that someone was asking about?
That was a patent that they were awarded.
Superconductor
none.
technology. I know nothing about this company. Zero.
Yeah,
All I can tell you is November had a huge move too, from $1 to like 450. Whoa.
they were awarded a patent for a unique manufacturing process, and they're obviously up.
Wow. Not much to say about this. Just give you your pre-market high. That comes in at $1.88. Now we've backed up 30 cents from there, so that could be a little protected. Nice round number of $2, but starting to leak after the initial news, so the high could definitely be in this one. Little stock.
Another one of your disaster stock of the day, Molina Healthcare, MOH. Spencer, give us the details there, and this could actually hit some of your other healthcare providers because this is a mess.
Yeah, Q4 adjusted EPS, oh boy, $1.54 loss versus a 58-cent loss estimate or a 58-cent loss in the same quarter last year, excuse me. So year over year, bad. Sales $4.463 billion versus $4.55 billion. So I mean that's a miss, but not nearly as bad as the year over year EPS disaster.
49.70 in the pre-market. It closed at 50.99. This thing's down $10. It's a huge move for Molina Health because that was the entire Trump run. Since the Trump low down at 48, actually we got down to 46.97. You're giving back, 90% of the Trump move in one day here. So, and this stock isn't really a volatile puppy. It usually doesn't have big moves like this. So 10 points is a little bit out of character for it, but they're hitting this thing hard in the disappointing report. And I gotta think they're probably going to hit some of the other healthcare providers too. Think about like Centene, CNC, that's offered down in the pre-market, was trading down near 70 last night, which would put it down $1.50. And I know sympathy has been moving well, but this is such a huge move. I think you're going to see have some sympathy in some of these stocks. WellCare Health Plans, WCG. I don't know, some of the bigger ones are a little bit different, like the Humanas and the Aetnas. I'm not sure it spills over to there, but you got to be aware of it. So it's a smaller player in the industry. But, UNH is obviously the biggest player in the industry there. And, it's not good news when you have one, and maybe it's company specific here. So, you have to kind of jump into the details of the report, which, we didn't just do just now. But something to keep in mind is that one of your healthcare providers is significantly under pressure here this morning.
And, if you're looking into dailies here, you got an important area coming up. Currently trading at 49.75. Back on November 15th. We made a low at 49.42, but I don't know. Something telling me that's not going to hold. Then you got a $2.50 drop for your next daily low, down to 47.41. Low that preceding day at 46.97. So if I was like really getting greedy here, and I wanted, just think there's going to be some more paper selling off the open, I would throw something in the lower 47 handle and see if you can get hit. $2.50 from where we're trading. So that's where I'd expect perhaps a first bounce.
We got 1 minute before the imbalances here. I'll just quickly give you a couple ratings changes here. Hershey catches an upgrade from Argus. They are upgrading it to buy this morning. Hasn't traded this morning, but it is bid flat there, 108.80. I'd imagine he might challenge that 110. That's got to be a big number. I'm thinking the 110 on Hershey's. Hasn't been there. I'm just trying to look out to the monthlies. I believe 110. Well, no, it was actually, if we just go to the weeklies, it was back there back in August of last year. But just a big psychological level. There is somebody offering at 110, so I think that might come into play play here today with the upgrade from Argus. Then you also had Wells Fargo getting downgraded Credit Suisse, and you have Bank of America getting an upgrade from Macquarie. So you got two banks going the opposite direction. Bank of America's trading flat because of the upgrade. A lot of your other banks are under pressure here this morning. Wells Fargo down about 0.5%. With Credit Suisse doing the downgrade.
I just want to talk about this Hershey's chart real quickly here.
Sure.
Dennis, did you participate? Did you do your old return to area where it was before the rumor?
Oh, I wish I would have on Hershey's.
Man.
I was kicking myself.
Going back, and Dennis, why don't you just explain that trading philosophy you have?
So there's been some rumors on Hershey's. I remember there was rumors back. Who was it that was sniffing around? Do you remember? I have Goldfish.
Yes.
I can't remember.
Mondelez?
Yes, but that was never going to happen.
Okay.
But anyways, there was rumors.
Yeah,
so it was trading around $95, $96. And the Mondelez rumors came out. The stock went to 117 that day. Crazy move. We were talking about it. Like, holy cow, if this is just a rumor still, why aren't you booking the profits? And then obviously, a month and a half later, the deal fell apart, or whatever rumors were there fell apart, and the stock came all the way back to where it was. And I always say, when a stock has, a big move, let's say stock is trading just hypothetically, we use Hershey's. It was at $95, goes to 117. It came all the way back down to $95. Well, now it's back at the point where it was before any rumors were in there or anything else. And a lot of times those are big bounce levels. And if you would have been buying Hershey's, you had 2-3 months to try it down there at $94, $95. Here you are, you're looking at Hershey's and it's back at 110, or 108.80. So yeah, the trade would have worked again there. I've done it a few times in the past. It's one of my favorite trades where you have a stock on a rumor, has a big 10-15% move, and then over the course of a couple months gives it all back, lets you buy it at the same level it was before the rumor was there, and then sometimes you see it drift up, or sometimes a new rumor materializes. So lots of good things can happen there. So just keep that in mind. If you are trading, those are nice setups when the rumors when the stock comes back to the level that was trading at before the rumor.
And Monsanto, what's going on with that? Have I been asleep at the
wheel? There's a 128 on the table. So we know that, from Bear. It's still there. It's Bear, right?
Yep.
Goldfish memory from me. That's why I always verify. Joel's got the memory on the show. Spencer's better than me, too, with the memory. I'm the worst with the memory. But, yeah, you analyze it there. And, Monsanto, same thing. There is a potential deal on the table. I obviously aren't that confident. It can still trade with a 19-point discount, I believe, to the 128 takeout price. But when this thing got back down to $97, you start analyzing risk return there. It's like, okay, well, the stock was around $90 when these rumors started, went up to 114. It's back. It's, again, one of those setups where it's almost back to the level where it was before the rumors. And this is a deal that's on the table. This isn't even a rumor. It's a deal that's on the table. It doesn't matter whether it goes through. So, there was a good opportunity back there when this thing was under $100. Now it's a 109. You start analyzing. Well, deal falls apart. It probably goes back down to $90, $95. Deal goes through. It's 128. It's kind of a coin flip at 109. So I don't like it as much here. Lower 100s, I like it though. As long as the deal's still on the table.
Yeah, this one never really came in as much as the Hershey's. The Hershey's was a perfect setup because it came all the way back. I think it went a buck or two below that area. But the deal's still on the table. Consolidation, we'll see what happens. And, a lot of deals have been getting squashed. We'll see what happens with this one.
Jumping over to imbalance land here, Bank of America with the upgrade from Macquarie. It does have a buy and balance of 126,000 shares, so that is trading in the green just slightly here. Other ones of note, man, they're pretty small here this morning. I'm just trying to find anything of note. Johnson & Johnson, 47,000 to sell. Procter & Gamble, 77,000 to sell. Those are notable just because they're big components in the S&P, and that's pretty sizable. Lilly, 34,000 to sell. You had some news, and the drug news on Merck there just 2 days ago. That was obviously hit Merck, but Merck bounced back fairly quickly yesterday, and actually during the day actually made a new high on the move. Merck's got some big selling pressure up there at 66 though. Not really seeing much else there. They're very small.
All right, let's take our break here. We're going to bring in Tracy Ryniec. She's a stock strategist at Zacks Investment Research. And last time she was on the show, Dennis, she made some pretty good calls. So we'll see what she's up to. We'll be right back with Tracy.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need thinkorswim. To experience everything thinkorswim has to offer, open a TD Ameritrade account today. thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host Joel Alcon, along with Dennis Dick and Spencer Israel, and we have Tracy Ryniec on the line, stock strategist at Zacks Investment Research. Tracy, how you doing today?
I'm good.
All right, welcome to the show. And before we go into some new stuff, you made some pretty good calls when we were on last time, and you were saying everyone hated Apple, but you liked Apple. You and Warren Buffett. Now what do you now what do you think here? It made a new all-time high after the earnings. Is it time to trim, or you still staying with that full long in Apple?
Yeah, I still like Apple. I think if you're into, a long-term holding, you're looking for something to hold for more than, the next 3 to 6 months, then Apple is definitely a place to be. It still has some good value. It's still trading well under the S&P 500 here. You're getting the dividend, and, people are bullish again on it. So, yeah, I still like it.
Okay, and I know you gave us a couple other stocks. One was a pharmaceutical company that I think Dennis actually bought. Maybe had some L's in it. It was around $17. You know which one?
LCI.
Okay, all right. Thanks, Dennis. LCI. That sector. Well, it's been hit a little bit, but this looks like it's the best in breed here. Tell us about LCI.
Well, I'm not as bullish on the drug companies as I was the last time we talked. I still do like Lynette. I actually own it in my own personal portfolio. And, they don't have as many of the problems as some of the bigger drug companies have. So that's why I do like them. And, yeah, their shares are up a little bit here recently after selling off again. But the whole drug sector, is kind of in flux right now. Nobody knows for sure what's going to happen in Washington, so that's adding to some uncertainty there. So I feel like the drug sector might be, for the first time in probably many years, actually, going out of favor and is going to stay out of favor for some time. So I do think you have to be a much longer-term investor, not a trader, as much to get into a lot of these names, because there is just so much uncertainty and nobody really knows where they're going. And I do think people are rotating into other sectors now that are going to be the ones that are in the spotlight for 2017 and probably even 2018.
All right. Well, let's go right to some of those sectors.
Well, it definitely has to be the financials. And yes, they had the big rally last year, but I'm still seeing quite a bit going on with them, and they're still being ignored, which is what I like. I like to look at areas where, despite the fundamentals, people are still in doubt about what might go on there. If the Fed raises even 2 to 3 times this year, which would be a little aggressive, but if they do, those earnings for even just the community banks should be up 30 to possibly even 50%. And, I like to look at companies that are growing those earnings, because that usually translates into good things for the stock. So community banks are high up on my list right now.
Can you give us any individual symbols, or should we just look at the...
Well, yeah, it's pretty hard with the community banks because there are, thousands of them literally. But there's a couple that insiders have actually been buying that people might want to look at because the insiders have been buying, and those would be, directors and CFOs and people like that are buying behind the scenes because they think something good is probably going on there. And I did notice recently, there's been some insider buying at a bank called First Merchants Bank that's in Muncie, Indiana, and that ticker is FRME. So these are the small banks. They're not going to be, big, huge investment banks like JP Morgan or those types. But, these are areas, you kind of have to look around. You can also get in and invest in a whole bunch of them through an ETF now that handles all the community banks. I think it's over 500 million or so. Like you do have to have, it excludes the very, very small ones, but it also excludes the top 50 banks. So you're getting more of those mid to smaller size banks. And that ticker is QABA. So for someone who just wants to own a bucket of them, that's a good way.
All right, QABA. We'll bring up the chart of that, and then taking me right into my next topic, insider buys here. Now, let's get your take on this. Now, Mr. Dorsey of Twitter just made a pretty big purchase here. A lot of implications for that as far as whether the company's in talks for takeover. Give us your take on Mr. Dorsey's buy. I believe it was $7 million worth of Twitter.
Yeah, I always wonder if they sit around and debate these kinds of insider buys. And these are the ones where the CEO is just doing basically a confidence buy is what I call it. And that's where they already own, millions of shares normally, and they go in with some big number to kind of make a big news splash and to tell the world, like, I still believe. And that's basically what Jack Dorsey was doing. But do they sit around and ask, like, do I do $1 million? Do I do 5? What about 10? Like, I don't know. Where do they come up with 7? I don't know. Maybe they just liked it. But, he owns 15 million shares still. And this was a little over 425,000 shares. So it was a big buy, worth $7 million. But nobody else that I've seen so far has been buying. So that it's not necessarily a red flag, but it usually does mean they think the sell-off was overdone and they're trying to just boost the spirits of all the other investors who are in the shares. But it does bring up the other interesting point you just said about how it probably means they're not in any kind of imminent takeover talks or, being acquired or merging with someone, because he would not be able to buy those shares if he had any knowledge of, talks actually going on. But someone could come in, say today, someone completely new that hasn't been on the scene and suddenly make him an offer, and that would be legitimate. So all we know is as of the 13th and the 14th of February, they probably, I can almost guarantee they weren't in any kind of talks on those days.
Yeah, I'll hold my breath for that offer today.
Yeah.
What about insider buying in general? I mean, we just talked about Twitter and Dorsey, but how are you seeing the number of insider buys, this earnings season compared to maybe last earnings season or earnings seasons prior?
Yeah, it's very, very quiet this earnings season. I'm kind of surprised by that because I do follow these insider buys every quarter, and I thought we'd see a lot given the election results and that animal spirits has kind of been unleashed on the overall market and even to some extent among consumer sentiment and in the economy. And usually that is when the insiders would buy, and they'd like to buy if they see good things going on within their own companies, obviously. But they've been mainly on the sidelines, so I am surprised that they're holding back, and I'm not sure why that is. We are hitting the new highs pretty often here in the overall markets, and a lot of stocks are at new highs. And the insiders don't necessarily like to buy on the highs, although some of them do, and that sends a really strong signal. Last quarter, some of the insiders were buying on the highs of Home Depot, for instance, and now that continues to hit some new highs going into their earnings release next week. So there are occasionally people who think it's so good they're willing to get in even on the highs, but usually they get in on the lows, which we're not seeing quite as much of those, although we just did with Twitter. So I don't know. I'm not quite sure why they're on the sidelines. There's been a little bit of insider buying at some of the big cap names, like General Electric had some buys, and Halliburton had one director buying recently. But otherwise, it's been abnormally quiet for the big guys. And then on the small side, there has been a little bit of buying in the community banks. But otherwise, like I said, it's very odd. I'm not sure if they're just kind of waiting to see what comes out of Washington. But we'll see. There's still a couple of weeks left, and a lot of the small cap companies haven't reported yet. So we should get some small cap buys. A lot of the large caps have more restrictions on when they can buy, actually. So could be that they have some compliance reasons, or their lawyers are keeping them on the sidelines when they want to buy. That's unclear, but we'll see if some more small caps start, insiders start buying in the next week or two.
All right, Tracy, I have to mention the stock you did put in your note here because it's the darling that everyone likes to talk about and try and trade. NVIDIA. Now, you noticed how.
Oh, yeah?
Yeah. Now, I don't know how closely you follow that issue, but tell us, is there been any insider buying or selling and the implications of that?
No, and I do follow it pretty close, actually. This is a stock that's a favorite of mine and a lot of my colleagues here at Zacks. But, you kind of wonder, are the insiders jumping in on any of these kind of really hot names like NVIDIA? And I looked around, and no, nobody's buying over there. Now, that doesn't necessarily mean anything, because some of these tech companies, they're either doing a lot of acquisitions, so that means they would be on lockdown, like their lawyers wouldn't let them buy anything. And it can mean a lot of the tech companies give out a lot of stock options and various awards to directors, more so than a lot of other industries. So people who already have, millions of shares aren't as likely to go out and buy more, which is why you never see, Mark Zuckerberg or Sheryl Sandberg buying more. It doesn't necessarily mean they don't believe in Facebook. It just means that they already have millions of shares and they're actually trying to sell them to diversify their own portfolio. So, nobody's buying at NVIDIA, but I do watch and I do encourage people to look in on some of these really hot companies to see if anyone is feeling so bullish that they're willing to add more, because that would be a really bullish sign for a company like NVIDIA if someone's adding at these levels.
All right, Tracy, we've covered all the secondary stuff. Now for the important question, and do you think Michigan is going to make the NCAA basketball tournament?
I don't know. The Big Ten is so tough.
Yeah.
I hope so.
Okay.
What do you think?
Well, I'll let you know after tonight. We got a big game, Wisconsin and Chrysler, that I'm going to with my daughter. So if they pull that one out,
Nice.
They're up to 17, 18 wins. I think they need 21, 22 to get in. So they're kind of stuck in the
Okay.
middle of the pack of the Big Ten. All right, we've just had a nice chat with Tracy Ryniec of Zacks Research, giving us her take on the current market, insider buys, banks, and drug stocks. Covered a lot, Tracy. Really appreciate it. We'll speak to you again soon.
Okay, see you guys later.
All right. Let's see how the market's doing here. We were in the red. S&Ps are trading down. Let me bring up just kind of hanging out here at the lows of the session. Dennis, are you back? Did you enjoy that interview?
Oh yeah, it's always like I said last time she was on. I bought that LCI stock just because she had mentioned, that she liked it there, and I went and looked at the value, and from a valuation perspective, looked great in the 17 handle, and it jumped up to over $24 in the next month, and I took it. That's when I got 6-7 points on. So I thank her for that. It pulled back that area. I should have rebought it, I guess, back when it got back to the 18.5, because it's right back up here at 23 again. I could have played it twice, but I didn't play it twice. I got it the first time there, and then I kind of forgot about it. But LCI was a good winner for me.
I just want to talk about Valiant here for a second. She mentioned the drug stocks. Ackman trimmed his position a little bit.
There was drug news with Valiant last night too.
Oh, really?
They had some approval last night. Spencer, do you have the details on that? There was.
Yep,
it got actually popped, and it dropped, and then it popped, and now it's kind of dropping again.
Yeah,
so.
It was FDA approval of Siliq, Siliq. I don't know what that drug does, but it got approved.
Right.
I saw a Wells Fargo note just going by that said that basically, actually, I'll just read it from you. This was from Mark Lehman from on Twitter, who I follow, is a great follow. Mark Flow Chatter. I'll read you his tweet. It says, Maris from Wells Fargo on VRX. Sell the news. Approval was already baked into the models. REMS limits the use. Label worse than expected. So that's what Wells Fargo was saying about the VRX approval here last night. So saying that was already baked in, which appears to be the case because stock is really not trading up much.
It hit a really important level here. You see a pre-market high of 1766. Let me go to the daily charts here to illustrate it's kind of hard on the daily chart because this thing's gotten killed so much. But we have popped up to the 1750 area. We did it here in January. Then we also did it here in November. But every time it's got up to 1750, man, this thing is, well, not every time. It's only done it a couple times. It's really caught a cold here and went right back down. Actually, one time it went down to make the multi-year low at 13 even. What a nice round number. Second time it went back down right to that area. Couldn't quite get to that nice whole number and rallying back up. So keep an eye not only in today's session if it gets back up there, but longer term, Valiant challenging some very important resistance.
Kate Spade's trading up here this morning, KATE. I'm assuming this is rumors. The rumors have been kicking around this thing forever. You can see the stock move, the big move back at the end of December 28th, when the thing went from 14 to 18, that they're potentially going to sell themselves. I know Coach has been sniffing around. I know Coors has been sniffing around. Is there more news here this morning, Spencer? Do we have any confirmation here, or just more rumors?
Well, it's earnings for one.
It's earnings too.
Well, they also said they're reviewing strategic alternatives, which is not news, right? But Q4 adjusted EPS 41 cents versus 35 cents. Sales 471 versus 472.8 million dollars. Direct-to-consumer comps in the quarter up 9.3%, or down 1.5% excluding e-commerce. So e-commerce is looking good for them.
Big move here, Joel. Again, This now is up at 21.80. I mean, now if you're looking and analyzing these strategic alternative stuff, really the stock was back around 14 or 15 bucks, 14 bucks when this started occurring. Now it's 21. So now you're talking about talking about a 50% premium you're paying over when, the stock started talking about strategic alternatives. I'm looking at this $22 level back at the end of April, May, June, July of 2016. That looks like major resistance to me, and you're right there right now. I don't know. I think I'd be ringing the register if I was in this thing.
Better place to exit along than to try short, as I would say. $22, Dennis. You took the words right out of my mouth. I have it back in 2016 in July and August. I'll give you the monthly highs, $21.95 and $22.10. Haven't quite hit that level up. We're kind of holding here a little bit up near it. So let's see what happens at that major monthly resistance area.
I mean, if a stock is taken over, technicals are obviously out the window. But this is just rumors here now. And I think, if I was prolonging this thing from 14, now it's up at 22, and I'm up 55% here in it over the course of the last few months. Most of this was driven by these strategic alternatives / rumors / Coors, coach sniffing around. I think I'd be ringing the register.
And this is gotta be one of the only retailers that it's had an impressive.
Oh, I know. That's what you got to consider too. If the deal, or if deal doesn't materialize, or they stop reviewing strategic alternatives here, what's your downside? Because retailers have been killed. I mean, there's the odd one like Nike that's come back a little bit, but for the most part, the retailers are really been slumping here for the last few months. And here you got ones going straight up, bucking the trend because of strategic alternatives. I'm not sure. Now, I will tell you, we've been talking about the retailers here in the last week. The retailers are starting to show some life. Like Macy's has bounced back, some of that due to rumors as well. But Kohl's has bounced back, JWN has bounced back, even looking at Coors and Coach. They've all bounced back since the lows. So, in the last week and a half, retail is back in favor, just as much as drugs are as well. It's funny how this market rotates into, from leaders to laggards. And lately, been rotating into everything. But the laggards have really picked up steam, and the laggards, two major lagging sectors for 2017, at least in the first few weeks, was retail and drugs. And they're starting to turn it around. The retail and the drugs have actually come back a long ways. I mean, you look at a chart like Biogen, BIIB, murdered in January, straight up in February. Straight up, I'm telling you. Look at Biogen. It's starting to look like it's going to sniff that 300 level, and that is major resistance for BIIB. Full disclosure, still have Biogen in my investment portfolio.
And we're also talking about the IBB as well. That is getting close here. $300 level on that, too. That's kept a lid on the rally since really July of last year. And another one we're kind of kicking ourselves on is this Gilead, Dennis. Right back.
They bounced, too.
Yeah.
It's right there at 70.
Yeah, that's the highest level it's been since that earnings washout. I got to get up into the upper set, the 72 handle to fill the gap. But nice, you had the follow through on the down day. You had that low to lean on, and nice little rally here in Gilead. I mean, they got killed on a pretty good report, and so we'll see. It's battling back, Dennis. Way to stick with that one.
$70 here. Well, that's an investment portfolio, so I won't pat myself on the back. I'm still down 10 points of the thing, so I wouldn't say it's not good. But 70s, it's got a running start out today. So 70 was your major resistance, got up there, closed near it. You always like that setup. Getting a running start to take out the 70 today. So if we can take out 70, it opens up a little bit more. But a lot of overhead supply here. Hard to get excited. I think the easy money was made in the last 3 days. I think it's going to be a little tougher sledding now for GILD if it even starts to get back into the 70s, because so many people underwater in this issue.
All right. Any change in imbalances here?
Let's go take a look.
S&Ps.
They've grown. Some are to the south side. It's very mixed day today. Walmart, 45,000 to sell. Pfizer, 38,000 to sell. General Electric, 63,000 to buy. It's going the opposite way. I'm actually long General Electric on my overnight portfolio, for full disclosure. Procter & Gamble, 87,000 to sell. Johnson & Johnson, 78,000 to sell. Those are interesting. IBM, 62,000 to sell. That's interesting as well. So I have seen a few sell imbalances here this morning. It might be an opportunity, if some of these stocks open a little bit too low. Dow Chemical, 62,000 to sell. That's an interesting setup as well. DOW had a pretty good move here the last couple of days. DuPont has as well. That's got a sell imbalance here this morning, so the stock might open on the cheap. Philip Morris, 33,000 to sell, which is PM. It's kind of mixed, though.
All right, let's just take a look at this Procter & Gamble yesterday, Dennis. It ended up opening at its low tick for the session. 89.81 was trading up on a pre-market. We weren't sure if it could open over 90. It did it, but boy, oh boy, if you had the wherewithal just to buy that $2 higher open, you could have just went up and got a cup of coffee and been up 50, 60 cents in that one. So those aggressive buyers in the after hours in the pre-market were rewarded as didn't get quite as high as it did in the pre-market session. Pre-market, you got up to 91.50, but got near that area, 91.15, a little bit in the red today. Let's see if the sellers reemerge in the $91 handle.
Overall market thoughts here, we are very mixed here today. So even like the imbalances I just said are mixed, but looking at the market, you're down a couple handles. The TLT was trading up a little bit before it's given it back here now. It's just a very mixed market, and these are tough opens to identify. Are we risk on or risk off today? A lot of times, I'd say 3 out of 5 days it's obvious. Today is one of those days that is not obvious at all. I can't tell if we're risk on or risk off. You tend to think we're risk off a little bit because you're seeing the banks get hit a little bit here this morning. Some of your defensive issues was bid up a little, but I wouldn't say any conviction in that call at all. I think this could be one. Gold was trading up, but it's starting to leak here a little bit as well. So I'd say this is very difficult to call whether we are risk on or risk off here today. And these are the hardest opens for me personally, because I'm always starting from top down. Is it risk on, risk off? Okay, well, if it's risk on, I'm going to get aggressive in some of the defensive, or I'm going to get aggressive in some of your cyclicals, some of your banks, some of your other issues. If it's risk off, I'm going to get aggressive, maybe buying some of your more defensive issues. But tricky open here today, Joel.
All right, I'll give you a couple things to lean on here. First of all, and hindsight capital here. Yesterday, you had a pre-market.
We love hindsight capital.
You had a pre-market low of 31.50, right? Well, the intraday low was 32 even, so you couldn't take out that pre-market low. You hung out for just too long. The buyers came in. I'm looking at that same scenario today. Can we take out the pre-market low? Pre-market low at this time stands at 23.44.50. Dennis, I can't even say. I keep going to the 21 handle. I don't even say 22.44. I just skipped that whole 100 points there. But that's what I'm looking at, 44.50, see if that holds. Now, I think there's a battle brewing here. We talk about half and whole numbers. 2,300 we finally got through. Now we're embarking on 23.50. All-time closing high, 23.50.50. Yesterday's high, 51.50. The current high, 50.75. So let's see if we can get back up that level. I just don't think we're going to have
You just gave like 10 numbers in the last seconds. Give
Okay.
me one, okay. So what's all that mean?
23.
Give me like too many numbers. I felt number overload
I'm with you,
right
Dennis.
there.
23.
He does that every once in a while. He's such a numbers guy. They start spitting the numbers like, oh boy, there's a lot of numbers in there.
I threw the 21 handle in there, and that's what messed you up. Here are your two levels. 23.50.50, all-time closing high. Major resistance. Minor support, the current pre-market low, could get a little bit of a sell-off below that.
We got about 1 minute here. We could grab a stock from there's like a bunch of them we didn't get to in the chat.
Yeah,
We're sorry we
let's do one more. Let's do one more.
CBS. Let's do the earnings. Bob Wire talking. They did report there last night. Is getting hit here in the pre-market. Talk about this CBS earnings report.
Q4 adjusted EPS $1.11 versus $1.10, so beat by a penny. Sales $3.52 billion versus $3.95 billion, so a miss on that. They're also in talks with the NFL regarding changing the format to games. I believe that's regarding commercials, and more or less, but not a great report.
All right.
Stock down 60. We're looking at 64.04 here right now. It's widespread though, and very light volume. 64.04 to 64.87. So you're talking about a stock that's a 1.5% spread here right now. So we're still trying to really, they're still digesting this report. You can call it still the price discovery, even though it was trading last night in the lower 64s. It's still trying to figure out exactly where it wants to be. So sometimes you come in and these stocks have already traded, a lot of volume, and they've already traded, with a tight spread here. This one, has not traded with a lot of volume, and this is still trying to figure out where it wants to go.
Yeah, pre-market low of 63.90. I see some better support under that level, really in the 63.50 area. So we'll keep an eye, see if it can even open under 64. All right, Spencer, let's wrap up today's show and preview the final show of the week.
So tomorrow we got 3 guests for you. First at 8:15 we're gonna have 2 guests on at the same time. Jim Carroll and Paul Hubner. They're from Point Capital Management. They do MLPs. They came on about a year ago, and they invest in the MLP space. And we don't talk about MLPs on the show hardly ever. So these are our MLP guys. We're gonna talk to them about that entire space. And then at 8:35 we're gonna have Andy Swan from Likefolio. He's the social sentiment expert. So Jim Carroll and Paul Hubner at 8:15 and Andy Swan at 8:35. Thanks for listening today, everyone. Please remember that all the information and material and content is for informational purposes only and not meant to be investing advice. And hope you enjoyed the show. If you want to listen to it again, you can catch the whole thing on iTunes, SoundCloud, and Stitcher, or just on YouTube right after we're done here. And have a good rest of your day. We'll be back with you on Friday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.